we have a scenario where price appears to be building a bullish momentum from the present structure we have here in the market. However, if we go back to our perspective on this market yesterday, we were expecting a bullish momentum after a breakout retest of that key level on $105 area. When we scale down to the 15 minutes time frame, we saw something that looks more like a double bottom structure, which I said that if that happens, that is, if we do not have a breakdown of this 103.21 area, then we could take advantage of that breakout of structure, retest of 105 level, then we can take advantage of the bullish momentum here on the lower time frame. But the scenario we had yesterday, at least during the New York session, was that we saw our price broke down that level we identify as 103 area. We saw price broke out that area, hereby negating that bullish momentum we were expecting. However, price did finally went above that key level during the later part of the New York session, and we saw our price form something that looks like an inverse, like an head and shoulder pattern here, and we saw price break down that key level one more time to do a retest of the key level to push price further down during the early hours of today. So at this point, I will want to delete this key level we identified here, and I'm not sure if this key level will still hold, but let's see what happens as my discussion goes on. So one peculiar thing we will notice here is this: after this impulse leg to the downside, we saw price tested $101.50, moved up into $107, and then came back down again, but was unable to break the previous low at $101.50 before it continued to climb back to the upside. So with this structure at this point, this looks more like a reversal pattern to me. However, we can't ignore the fact that we had a breakdown of that bullish trend line here, and price appears to do a retest of that breakdown in the form of a rejection of this level during the later part of the New York session yesterday, pushing price further down. But because price was unable to break down the previous low, I want to have the opinion that a bullish momentum is very possible evolving right now in the background. So let's go back to our 1 hour time frame and let's have an holistic view of what we are talking about here. So going back to the 1 hour time frame, remember I told you how if we see a higher low at this point, it could be a retracement into the golden zone area of the impulse leg we've identified earlier, after which price will push further down, giving us a scenario that looks more like a counter trend opportunity going into the New York session today. So what I want to be looking out for here is to find out a key level that will guide our actions going forward. So let me delete this. Let's delete this. This no longer holds. So if we look at what structure is right now, and if this area is going to be a reversal pattern, then definitely we want to have a neckline that will guide our action going forward. So if we look at the neckline of our reversal pattern, you can see that it will fall within this area at $107. So let's label it $107. And why is it at $107? We know our reversal pattern very well. That is the double bottom structure, which is known to be a very strong, significant reversal pattern. We will know that after every impulse leg, that is, if we have a move to the downside like this, and we have price come into an area, then pushes further down to form a higher low, then we want to see a breakout of that key level, that is the neckline at $107, to give us a signal of a bullish momentum that price is actually doing a reversal of the prior leading price action. So if that is the case, then definitely we want to look out for a retest of structure Then go down to our lower time frame to look out for patterns that support a trend continuation to the upside. So I'm very sure some will have been worried that we didn't have as much opportunities here on the US oil and the UK oil like we've been having in the previous weeks. And this is basically because of what is happening in the market presently, where participants are still not very sure of how price is going to go, considering the fact that the US government just are planning to introduce a tax holiday for the oil sector. And I'm of the opinion that participants in the market are not yet sure how this development is going to reflect in the market. So we've been having a lot of consolidation phase during this week. And to be on the safer side, we really need to be very, very cautious and patient at the same time so that we don't jump into any unnecessary position that will put us on a losing trade. So that's why we've been very, very patient as we want to look out for significant signals that will give us a hint, after which we look for confirmations to join whatever potential that is coming. So what I want to be looking out for here is this. I want to be hoping that this is going to be a double bottom structure. And if that happens, then definitely we want to be looking out for a breakout of that key level, which is also the neckline at this area at $107 to give us a signal for a bullish momentum. That is a reversal pattern. Probably it could be a temporary reversal pattern that is a retracement of the previous impulse leg we have here since the beginning, since on the 14th of May. We saw that we had this, sorry, what's happening here? We had this impulse leg since on the 14th of May, and we could be having a retracement into our golden zone area before we see a reversal pattern to the downside. So for the meantime, let's hope that we get a structure that projects a bullish momentum during the New York session. And now one thing I also want to call our attention to is this. You can see how this key level at $107 shares a confluence with the bullish trend line we identified on the daily time frame. That bullish trend line, if you would, okay, let's go to the daily time frame so that we can have a clearer perspective into what I'm talking about here. So we can see on the daily time frame we have this bullish trend line that has been holding price action since September last year, and you can see how price has been respecting that trend line since the beginning of this year, as at no point in time price gone below that area, and if it does, we normally see a sharp rejection, a sharp snap back into the trend. However, during the course of yesterday, we saw the breakdown of that area, but it looks more like, you can see the week, we saw a rejection of this area. And if you look at the neckline I identified on the 1 hour time frame, that is the $107 area, you can see how it shares a confluence with that bullish trend line. So for any bullish momentum to be confirmed on this one, we want to see a breakout of that key level at $107, which also shares a confluence with that bullish trend line as well. Definitely, you know, if you're on a bullish trend line, you want to be taking trades right above that trend line. So you can see how the confluence gives us a clue into what is happening at this time. So a breakout of that structure, a retest into that trend line and that key neckline could give us a signal of a trend continuation to the upside, which I think is going to be a retracement phase of the impulse leg that began on the 14th of June. And if that is going to be the case, then definitely we could be looking out for a reversal pattern around this area to push price further down. So this is my perspective here on the US oil, and let's see how price action plays out during the New York session, which will give us a clue into what our expectations will be in the next coming days. So going back to our 1 hour time frame, if we are going to take advantage of that move to the upside, how do we do that? Well, definitely, like I said, since we are looking for breakout and retest of structure, we don't want to take any trade right below the key level at $107. So we want to have our entry point right above $107. That is, after the confirmation has been done, have been complete. And if that happens, we want to have our entry point above that level. Then we have our take profit target. Sorry, first of all, let's identify our stop loss. Stop loss right below the key level, let's say around 100. We don't know how the stop loss is going, how far it's going to be. It depends on our point of entry. Remember, it's not all the time price does that retest in that into that area. I used to mention this, I re-emphasize this. Like I said, we are waiting for breakout of structure, retest into structure. Sometimes if the retest cannot go this far, it could be right above this area where we could see a reversal pattern to push price further up. So it is very important that we know our reversal patterns very well, as we do not want to miss such potential when it comes. The breakout could come, retest could come as far as low as this before we see that continuation to the upside, and the retest could break out of that key level and price comes back down a little bit into probably 108.50. Then we see a reversal pattern that push price further up. So the most important thing here is we should know our reversal patterns very well. We should be able to identify a reversal pattern when it happens. That is your inverse head and shoulder pattern, your 1 2 3 pattern, your double bottom structures, whatever it is, your rising wedge, whatever it is, we look out for that to give us a signal that price is going further up. So that's why for now I'm going to just say that our entry level should be right above the key level. That will make us very comfortable as we are looking out for a breakout, retest into somewhere around the key level to take advantage of a bullish continuation to the upside. So if that is going to be the case, it now depends on your entry point that will determine where your stop loss is going to be. And once that is set, we could be having our take profit target at somewhere around the our golden zone area, which is always between the 50 and the 78.6% retracement of the previous impulse leg. So if we have an impulse leg that started on the 14th of June, that is from $123.50 down into $101.50, then definitely we want to be looking for the retracement of that impulse leg. So if we bring out our Fibonacci retracement tool and run it through that impulse leg, we are going to be having a scenario where we look out for our take profit target within the golden zone area, which I mentioned earlier is right between the 50 and the 78.6% of the previous impulse leg. So what this simply means is that our golden zone area, our take profit target will fall within this area if we are taking that counter trend opportunity, that is that bullish potential. So our potential TP will fall around this area for any buying, for the buying opportunity we are going to be taking at the breakout, at the break that is breakout of that structure. So this is what we are going to be having here. So we're having our potential take profit around here, which will dovetail to at least a minimum of, let's say, 600, 700, 800 pips to almost as much as 1000 pips thereabout to catch on the US oil. So how far that is going to go, we don't know for now. So it depends on how price plays out. If we see a breakout of that key level area, so we see a killer breakout, that's what we are looking out for any bullish potential here on the US. So now the other scenario we are going to be having here is for selling opportunities, as if you want to be joining the bearish trend line, you want to join in the bearish trend, then we want to be looking out for how we could take advantage of that bearish move when it finally happens. So the first thing is we will look at what has been happening since the midweek of June, on the 14th of June, and let's connect the series of lower highs. And if we bring out our line chart at this point, with our trend line, we could connect the series of lower highs and it will look like this. I'm sorry for the breaking transmission. So, sorry, I'm back. So the scenario I'm explaining here on the US oil is that we could be expecting a bearish momentum as well after considering the bullish potential we just talked about a couple of minutes ago. So, in as much as we have the potential for that bullish momentum, there is a possibility that we could be having a bearish momentum. But if that's going to happen, I don't want to think that it's appropriate we sell anything from this area as price could spike back up quickly from the spike. So in as much as that, we want to be looking for a comfortable area where we will be able to see a significant signal that will support that bearish trend, that bearish continuation, so that we can at least catch a significant number of pips for ourselves. And to do that, like I always tell you, I'm a long-term trader. I prefer looking at patterns for a long-term gain rather than short-term. So what I'm going to be looking out for if I'm going to sell this commodity here is this. I want to see price come into this bearish trend line, back into this bearish trend line. Then I see a reversal pattern within that area. And if you look at where that bearish trend line falls, it shares a confluence with where price was at the previous week. I'm sorry, the beginning of the week. That is, price was around this area at around $110.50 during the beginning of the week. where it's very possible price could go back to that area, then push price further down. So what this simply means at this point is this: for any trade we are going to be taking on the US oil, we really need to be very, very patient. Prices fall into a consolidation phase majority of the time this week. And for us to take advantage of any trend, we really need to be very, very careful, as there are a lot of policies and events going around the world right now that could affect the price and push price in either of these directions significantly. So I would advise that we remain patient. We have this first scenario: break out of that structure of key level at $107, retest of structure, then we might take profit target within the $112 area and the $119 area. However, if we see a reversal pattern lying around at this bearish trend line, then definitely we want to move our stop loss to break even, and then move our stop loss somewhere around $108.50. That is, if we look at the left, we can see we have a structure around this area that has been a demand in the past. Since the beginning of the week, we can see how this area has held price supported for quite a time before we saw the breakdown of that structure. So what it simply means that $108 area appears to have been a strong demand zone, and if price breaks above that area right now, we want to move our stop loss to somewhere around this area. And if we see a reversal pattern forming around this area at $110 area, and which also shares a confluence with that bearish trend line, then we want to be looking out for a trend continuation to the downside, and that means price is going to one more time respect that trend line to the downside. And if we do have a breakout of that trend line, like this, we have a breakout of that trend line, then a retest into that area or this trend line, or sharp one to this trend line, then definitely we want to add more position after we see patterns that support a trend continuation into our TP target, which is within the $112.50 and $119 area. So this is my perspective here on the US oil, and I hope you'll be very patient enough to be able to take advantage of whatever bias or perspective that comes into play as we run into the later part of the week. So I'm not sure if we have any questions whatsoever, so that I can quickly put some light or shed some light onto it if you are not clear at any point during my explanation. So anybody in the house who thinks that is he or she still needs more clarity into what I've just explained so far, should just call my attention with a comment, and I will be glad to be of assistance in that regard. So I'll give 10 seconds for that. Babies 1516, hello, how are you? Trust you're doing well. Can HB4 good? Okay, I'm awesome time. Bitcoin. Everyone is asking for Bitcoin. Well, let me just shed some light on that Bitcoin right now before we go into the chart. One thing I will say is this: Bitcoin is dropping significantly, and if you are a long-term trader, you want to only invest in the Bitcoin on long-term perspective right now. But if you are a scalper or a day trader, it's going to be very, very dicey at this point in time, as market structure is very is not uniform at this moment, as anything can happen. Some people that market is now gripped with fear at the moment, and if you actually want to do anything there, selling opportunities is most likely. However, if you are going on a long-term perspective, it's another time for us to just add more funds into that market. That is, you are going for a long-term perspective, like say 3 months, 4 months, a year thereabouts. Well, it's good to buy because it's very, very cheap at this particular point in time. But let's see what's going to happen towards the end of the session. If I have time, I would quickly run through the chart and let's see what speculation I can or what thoughts I can put on it. So, with no much further ado, Moist82, hi, how are you? You're welcome on board. You're just coming in, right? You're welcome. So, let's move on to the next page.